Hi friends, welcome back to our YouTube channel AlgoWise. So we are recording this video after a period of close to 4 to 5 months. Mainly in the last 3 to 4 months, we were busy with the development and testing of our algo trading software. That's why we were not able to make much of these long format videos. So mainly we were focused on news snippets, shorts, that kind of videos. So we thought right now it's the best time. We have the bandwidth and the time to, go ahead with our series of educational videos, which we used to make earlier. As you guys would already be aware, markets are near to its all-time high. It's already at the kind of overbought level. So today we'll be discussing strategies on how to screen shares in such kind of a market scenario. So we have Molloy with us, like we had made videos earlier also with Molloy. So he will be explaining us in detail on what strategies can be used in such a market scenario. So Molloy, welcome.
Hi, Kalyan.
Yeah,
Yeah,
good to see you.
yeah, good to see you as well. So,
So
okay.
we'll go
So,
ahead with the details and the insights.
yeah,
Sure.
okay. So let me share my screen first. If you can see my screen, so I have listed down the two strategies as of now, which we can discuss in segments. Okay, so the first strategy is when the business is in headwind and where still the stock is standing out. So that is one strategy, and the second strategy is the business with bad results, but yet the stock price is not correcting and post results, it's not reacting to bad results. So what is fundamentally going on into the company? So even if why the stock is not correcting, even posting bad results, so already the worst scenario or the down cycle has been already valued in the share price. So that needs to be seen into, and if there is a conviction enough that yeah, the price correction is already happened in the stock, and from here on there is a chance that it can go up. So one can look into that. So these are the two methods of screening. So for today's video, let us discuss on the strategy number one, which is
Okay.
business in headwinds, where still the stock is standing out. Okay. So
Okay. So just interrupting you here,
okay.
can you also explain the concept of what is headwind in share market and what is tailwind in share market? Because these are like quite popular terms used.
Yeah, so headwind and tailwinds are the scenarios in which a specific sector is in. Okay, so like when we say sunrise sector means where the sector is doing good, and for the next outlook for the next 4 5 years, or is very good for that particular sector. Okay, and that sunrise sector can be also termed as this tailwind. Means the tailwind scenario is when everything is playing good for the entire sector. Okay, and headwind is the opposite term. When headwind means when the sector is not, is bearish type, and the growth prospectors or the operating margins are impacting both the top line and the bottom line.
Okay.
Okay, so that is the that is termed as a headwind. Okay,
Okay.
so uh, so let us go back to the screener. So where I'll talk about a company called Fineotex Chemicals. Okay, so now the question is how the this is aligned with the first point. Business is in headwind, whether still the stock is in standing out. Okay, so to
Okay.
understand that, the Fineotex Chemicals is a specialty chemical company. Okay, and it mostly deals with specialty chemicals which are required for the textile industry. Okay,
Okay.
so now, uh, since they are a supplier to the textile industry, then the question would come, whether the textile industry is in tailwind or in headwind, right? So to understand that, let us open the Page Industries. Okay, the Page Industry is one of the leading textile company, right? So
Okay.
they are into apparels. So if you see in the screener, so in the screener, you can see the companies with the highest market cap. Page Industries. Then we have KPR Mills, Creval Cot Cloth, Gokaldas Export. Dollar Industries, Rupa. So
Okay.
they so if you look into the quarterly number, profit number on year QOY basis, means from the last year quarter to till this year quarter, if you see the numbers, most of the companies have posted negative numbers, right?
Okay,
So
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 compared to
now
2022, we are comparing it with 2023. So basically one year, what's the variation?
yes, one
Quarter
year, what is the profit variation? So if
profit
you see the
variation.
mean number, yeah, the mean number is minus 22.5% down. Okay, if you look into the sales number, means from the last year, the same quarter till this year, the sales means the top line has grown. That is also negative. There is a degrowth
Yeah,
in the top line and bottom line. So from here you can gauge or you can have an understanding that okay, this sector as a whole is not doing good. Okay, so now what Fineotex Chemicals does is they supply specialty chemicals which are required for the textile industry. Okay, now
okay.
we'll go to now. If you see the page industries as a whole, since this is the biggest company
Market
in
leader, yeah,
the
with the
so
highest
if you
market cap, right?
yeah, so if you see from the March quarter last year, the sales has gone down, the operating profit margin has gone down. Okay,
Mm.
the operating profit margin has gone down. It has so that there is a decrease in the demand. The revenue has gone down. The operating profit margin has also gone down from 24% to 14%. That means either they don't have the pricing power, either the raw material price has gone up, or they are not able to increase the price of their finished product, because if they do that, then the top line may be impacted further. It may go down further. So they are not having the
Okay.
pricing power at this point of time. The textile being a cyclical industry, at this point of time, they are not having the pricing power, which itself indicates that the sector is not as a whole doing good. Okay,
Okay.
so now going back to the Fineotex Chemical, if we look into the numbers of Fineotex Chemical, okay, so if you see here, so as I told earlier, it's a specialty chemicals supplying to the textile industry. So if you see the quarterly profit from the last year to this year, it's up by 30%. Okay, and if you see the sales number is marginally down. So okay, so sales number is marginally down because of the supplier to whom they are supplying, they have a less demand, right? But
Correct.
still they have increased the profit by 30%. So what is the reason for that? If you look into the operating margins of this company, if you see here from 2022, the operating margin was 19%. It has increased to 24%, and there is also an increase in the top line as well. From the sales has increased from 136 to there is a marginal decrease, sorry, in sales number from 136 to 132, so around 2% down. Okay,
2%.
so what makes the company stand out is that see in a scenario where I am trying to sell a product, and to whom I am trying to sell, they don't have as such demand, right?
Correct.
But
Right. Yes.
still I am selling them at a higher price, and they are unable to negotiate with me. That is the reason my operating margins has gone up from 19% to 24%. So think of a company who in a down cycle can still negotiate with their immediate customers and can still have a higher operating profit margin. So once the industry cycle changes, and once the headwind becomes tailwinds, so at that point of time, if they can hold on to to this operating profit margin, and if the revenue grows as it has done from, see, if you can see from June 2020, so from sales was 30 crores, now it is 132 crores. Okay, and if
Yeah.
you
Three
look
years, it's almost like four times.
3 years is almost like a four times. And the other thing is that if you look into the numbers, the annual numbers, okay, 4 quarters, if you analyze the number from 2012 to 2023, the sales has gone up from 80 to 517. Okay, and the profit has gone up from 6 crore to 90 crores. Okay, so since it's a small cap company, you can the net profit was very low to start with in 2012, and on a lower base it has made a significant jump. Okay, so it has grown more than, if the company has grown say 10x, so in profit, so 6 would have become 60, so now it's 90, so it has grown more than that, around say
Correct.
13
15 times.
14x.
Yeah.
Okay, so now if you see here, the stock so the stock price generally follows the bottom line number. Okay, and the bottom line should be in sync with the top line. It's not that you are selling your some assets and making bottom line. Okay, so it's not that you are selling some of your fixed assets, like you have some land, you are selling that. So the top line and the bottom line should go hand in hand, and if you can maintain a good bottom line return, the share price would follow. So how can you confirm that? You can confirm that from these numbers. So the stock price, if you can see that in the 5 years, the compounded profit growth is 31%, and the 5 years the stock price has also gone up by 38%.
38%. Yes.
Okay, so the return on equity is also good for the company. It has historically from 22 to 25% from 5 years to, if we look into the 3 years, means they are taking some steps already. 2022 more than 20 is an impressive number, right? So anything, so they are posting, they are further going up from 22 to 25%, so that's also a good indication. Okay, so now we can look further uh, into the some of the numbers, like so now, okay, we understood that this is something, how the scenario is playing out for this company with a down cycle sector. Okay, so now from valuation perspective, if we look into it, the stock price is 34.8%, right? So
The
PY is
PY.
PY is 34.8. So now if you look into this number, the sales variation and the profit variation. So historically, if you see, the sales has grown by 38% on an average of 3 years, and the profit has also grown around 64%
64%. Yeah. Yeah.
in
Yeah.
three years. Okay,
Yes.
so with these numbers, they are commanding a PYE of 34.82. Okay, and think of a scenario, the sector is already down. Okay, so even if the sector is down, if the sector goes further down, or it remains as it is, if it can, it doesn't need to grow in the next 4 5 years. It doesn't need to grow. The bottom line doesn't need to grow at the rate of 64%. If it grows at 30%, half of this one, still it can command a PYE of say 34 to 30. Okay, and imagine if the sector turn around in this time frame, within 2 3 years, and if it started making a profit of say and 90% on a lower base, so there is even a good potential for the stock to not only grow as 30%, it can grow further, right? It can grow on an average of say
Yeah.
45 50%. So this is not a investment recommendation, but this is what I'm trying to say is that uh, from the valuation perspective, the stock looks good. The sector to which it is supplying, the sector is not as such doing good, but still the company is doing good. So it is a relatively safe bet in a market which is already overvalued. With respect to the overvalued is a generic statement, but with what happened in the last 2 3 months, since the stock price has appreciated, there can be some consolidation, right? So some consolidation, some correction may happen. But this company, with that scenario, keeping in mind that there can be some correction, so if, this company can be a safe bet. So this is the screening procedure what I was telling about, the number one strategy. So likewise, you can look into the other sectors as well. So you can screen, you can go to the other sectors, you can look which sector is not doing that much good, but still the companies which are, for example, if you take an example of auto sector is now doing good, right? So the
Yeah.
company who supplies to the auto sector is auto ancillaries, right? So so like then if you take an example of pharma is also not doing good. But so the API companies who make the active pharmaceutical ingredient, which is the raw materials for the pharma company. So are there any API company which is doing good even when the pharma company is doing bad? So
Okay.
then you can look into the valuations of that stock, how it has done, how is the return on equity, return on capital employed. You can
Okay.
look into some of the parameters and decide whether it's a good bet or not. So that's the screening procedure I was talking about.
Okay, okay. And in general about the textile industry, so Indian sellers have, or maybe Indian exporters have a stiff competition from sellers from Bangladesh, right? Like they make the product at a very less price, and then that's what they have the price advantage. And secondly, cotton price has also gone up, right? So I think for for companies which have like textile companies, they have cotton as their raw product, so it has gone up. So their uh, cost of acquiring their raw product has gone up. So that has impacted those margins. Correct, right?
Yeah, that's very true. So India faces a stiff competition from countries like Bangladesh, Philippines.
Yeah,
Okay,
Philippines,
so
of course, right?
even China now there are some issues with China, because of which some of the business may come to India. But Bangladesh and Philippines are already doing good. So India government is also looking into this sector, and they are trying to come up with some PLI schemes which would benefit the textile industries. Okay, so apart from that, and the second point which was very important that you mentioned was about the raw material price.
Raw material price.
Because in the page industry we saw that the raw material price, the operating margins were impacted, and the two scenario which I told, that the operating margins were impacted because one of the reason can be the increase in the raw material price, right? So the base supply, the raw material, one of the important raw materials for this company is the cotton, right?
Yeah.
So you can look into the cotton price here in the screener as a commodity. If you can see from
Mhm.
2012, what is the price trend? Okay, so it typically hovers around say 140. Now suddenly there was a spike in the cotton price, and now it is coming down. So if it consolidates say around this level, so in when the company was in this range to the as it was shown in 2019 and all, so the textile industry was somewhat doing good. So if it consolidates around this level, say 130, 140, because this price is not sustainable. So that is one of the reason that how can the industry be impacted from here on. So for here on the industry to be impacted negatively, the cotton price needs to go further up. Okay, but if you take a decent time frame of say 2 to 3 years, if you see that this kind of range is never sustainable over a span of 3 to 4 years. If you look back the 10 to 12 years data, right?
Yeah, yeah.
So that is one of the one more thing which investors can look into.
Okay, okay, okay. Hmm. Okay. We will have a second part of this same discussion. So wherein we'll discuss about the second strategy. Can you just give a 1 minute overview of the second strategy, which we'll be discussing in the next video?
Yeah, the second part is also very interesting in a way that we will again talk about the sectors which are not doing good, and there, in spite of posting very bad results, the company is resilient. The stock price is
Okay,
not going down,
okay,
so in fact, it can show a reverse trend as well. Okay, so
okay,
trying to understand why it is not going down further, whether the market has already factored in all the negative things, and from here on whether the company can grow further. So that is the it is finding out the reason why the company is not doing bad overall, even after posting a bad results, and how is the FII and DII playing with that particular stock.
okay,
So taking into these two factors into consideration, there can be another screening method, but we can discuss that in details in the next video.
okay, sure. So yeah, I think pretty much fine. So yeah, we'll have a part two of this same discussion, and in that second video, we'll discuss the second strategy. Uh, So I think that will be all for today. And viewers, you can subscribe to our channel, and you can also like the video. If you have any specific questions, you can directly post it on the comment section, and we'll reply to that. So until next time, Molloy, I think goodbye for now, and we'll see you in the next time with the a continuation of the same video. Yeah.
Yeah, sure.
Yeah. Thanks for
Okay.
joining.
Yeah, thank you.
Bye.
Bye.